Next panelists, so if I can have Phil Rasori, Justin Grant, Andrew Rhodes, and Paul Yarbrough, come on down. So we'll get it started off by bringing the one, the only, Phil Rasori to the stage. Why don't you go ahead and take the podium, sir?
Chris.
And you can, this is my microphone. I get this one.
The clicker.
You can have the clicker,
I was looking
guess.
for your walkie-talkie there. Okay, so.
Once again, these guys, all right.
All right, there we go. Sorry, the buttons weren't obvious here. I appreciate everybody. It just like Curtis said, you know, it's great to see you all here. 10 years of the exchange. Really, you know, it is a celebration, and look forward to hanging out with all of you guys. We are on this panel pressed for time, especially since I threw a little current market volatility slide in here. So we'll get started, but just wanted to, you know, kind of introduce the team. We got new pictures yesterday, which is good. I believe I look a lot older, but I'm 43. I think that's when I was 33. So it definitely been a while since I had the goatee. Justin Grant runs investor services, and he'll be talking, as Curtis said, about BAM Marketplace. We're really excited about that. Andrew Rhodes is our head trader. Just to take a little step back memory lane, Curtis talked about best execution loan sales. Really, that was kind of our first where we felt we changed hedge advisory in 2005 because hedge advisors really were not in the best execution space. For those of you guys that were best efforts to mandatory back then, you'll remember that the biggest competitor to a hedge advisor was actually best efforts, right? And so we actually hired Andrew to be a pure loan sales specialist. And I always joke that 17 years later, you can see how good that turned out because he's actually our head trader. But you know, it's definitely a you know, the loan sale piece of, you know, what we do is absolutely, like Curtis said. Curtis used the term favorite child. You know, it is the heart and soul of our service and outside of hedging, you know, through MCT Live. So we'll be talking a lot about that. But Andrew will be talking about agile trading technologies, and then Paul Yarbrough, Client Success Group. I think, you know, you guys all know Paul with you know, or for those of you that have started in the last few years as MCT clients, and for those of you that have transitioned or done probably anything with MCT Live, you know Paul or his group. CSG doesn't do him justice, though. He's definitely a key part of the puzzle of innovation, you know, at MCT Live. So with that, I'm just going to jump right into. I think we would be remiss, right? Where, like Curtis said, it is a celebration. Curtis is a little taller than I am. You know, it's a celebration, but look, this is a capital markets conference. We're a capital markets. You know, we're all in capital markets, right? So I think yesterday, you know, I had this slide kind of pre-prepared because of 2 days ago and kind of the craziness that was going on. You know, far be it from me or Andrew or Justin to be happy about a 100 basis point, you know, tank in the market coupon, which of course happened yesterday. But I think yesterday was, you know, I think we can all agree that was good. That kind of definitely flattened out some of what we were potentially thinking could happen in the market. With all that said, I think you know, you guys are probably just as good geopolitical experts as we are. You know, just talking over dinner or talking to anyone, it does seem that it's hard to see a real good off ramp here. So I do think we should talk a little bit about volatility. But again, just you know, we sent out the market flash February 24th when it all started. You know, it's all pretty obvious stuff as far as limiting exposure. You know, we did get some questions. Hey, Phil, you know, why are you saying limit locks after market hours when you guys are just expecting that this is going to cause a rally, right? you know, in effect, if you think the market's going to go up, you just accept locks. And yesterday would be a good day as to, you know, good reason as to why you would, you know, you'd want to limit exposure. You know, there's a lot with the rate, you know, rise that we've seen this year. There's a lot of interest, obviously, in long-term locks. Maybe for this next couple weeks, this wouldn't be the best time to, you know, push those to market, or a lock and shop product, or so, you know, maybe just, if you can, at least right now, be a little bit more conservative. And you know, this last part, beware of the bitter borrower, it was really, you know, clear to us a couple days ago, again before yesterday's tank, that if you think about that, let's just take it back to 2020, March of 2020. Really, one of the only good news that I was telling, you know, all of you guys on webinars was that, you know, even though we had this big rally, we weren't expecting a whole lot of fallout because borrowers were scared, right? The financial system was, you know, potentially falling apart. And borrowers wanted to close. And yes, we did see a little bit of drop in pull-through, but it wasn't huge. So from a pull-through perspective, there was not a profitability hit. Turn that around to today, and I mean, think about it. You've got to go back basically 34 months to get to where the Freddie rate survey is today. And so if you're a borrower who probably, you know, hasn't had a smartphone, a TV, or an internet connection, you know, you're still doing rate term refis. They still exist. We have 4,300 loans in the pipeline that are rate term refis over 4.25% note rate. So think about it. You're that borrower. You're paying all those fees, and you're sitting there with 4.25%, and everyone you know has, again, out of those 34 months, I think 19 of the months had, you know, were sub 3%. So everybody's got a 2 handle, and you're sitting at 4.25%. You're pissed. And so I do think the public sentiment, if we get a rally, will be different. And so it's just be aware of that. On the rate terms, we would expect a harsh, you know, pull through fallout, you know, if we did get a rally. So and Chris, are you? Well, I don't know. I'm not sure how far behind we are. I'll just pretend that slide didn't happen there, and we'll just keep going through. So. So basically, you know, on the lock volume indices, I wanted to, we wanted to release this today. We'll be releasing it Monday in all of your logins. That'll be something you can consult with Paul and his team on as far as turning the tab on. But we've spent a lot of, you know, over the years we've been asked about lock volume indices. We've kind of stayed away from it. I think that this year, more than any, as the market has deteriorated after such a long period of low rates where you get serious, you know, we've all talked about burnout, right? We've talked about refi burnout for 20 years. And especially in the last 10 years. But this time is a little bit different, right? We've had a really good run of rates here. And, you know, time and time again, we look at the MBA numbers, which, to be clear, are great, and they represent, as the MBA says, 75% of all originations. To your guys' credit, they're not really representative of the lenders in this room. And that, of course, is because the household names that we won't use, but, you know, that, you know, might rhyme with, you know, G rate and all those groups, you know, those are heavy refi shops, right? And in the good times. And at the end of the day, what was that, Chris?
40 minutes left.
We got 40 minutes left. Oh, thank you. No, that was bad timing. Okay, thank you. All right, 40 minutes left. Okay, so yeah, we will get moving here. So bottom line, rationale for the index is 2 reasons. This is different in refis, right? I mean, the MBA does break them out, but the headlines, as you guys know, are purchase. You know, it came out a couple days ago. Purchase versus refi. A refi is not a refi, right? You've had, you know, basically 30% property value growth since the start of the pandemic. Cash outs are strong. We've got basically 22% of our pipeline is cash outs right now of the overall. If you sit and you think about that, looking at a global level and looking at the pipeline that still sits at 30% refi, which is under indexed versus the overall industry, that's a little bit scary. But then when you look, that 7.6% of new locks are rate term refis. I mean, full stop, right? You could have a 50% drop in rate term refis from here. It's going to affect you guys in aggregate at 3.5%, right? So I think this is why it's a good time for us to produce, come out with the index, and what it is it's going to allow you guys to basically adjust, basically match how the MCT overall index is doing versus on the same screen versus your index. Now, let's talk about indexes. You have to have a base, an index base. I've set this on this graph at January 3rd, the first business day of this year. For those of you that don't know, the MBA's index was recast on January 14th of 2011. Doesn't really matter that it was so far, so long ago, but it is hard to kind of rationalize if it sits at, when you actually see the number, if it's like 290 or something. So we definitely want to have our base index closer. I think that the key functionality, though, and we'll do a release video on this. The key functionality is you were able to adjust your index, so you can see. So this was January 3rd of this year. Red line is obvious. That's rate term refis. They have continued to decline. And we're strong on the purple purchase there. But if we go forward, that is, and I know that's pretty hard to look at. But this takes it back to the middle of 2021. So if we index starting at basically the end of Q2, so July 1st of 2021. You can see where we are now for all these three lines. Now, the important ones to look at are basically yellow and purple. The red line goes from, and you can't read the numbers obviously, but it goes from 180 down to 34, and so that is rate term refis peaking in early August of 2021, and they are down 81%. I mean, that's 81%. You think about that number, and that is the other 19% literally didn't understand the question. So you're sitting here at, now you've got purchases, if you can see, and I want to talk about purchases and the total, and then we will be on to the innovation part, I promise. Purchases are sitting here at basically just over the index. And it's important because if you read the MBA's analysis, again, I'm not beating up on the MBA, they are 9% down year over year. It just shows that you guys have a different, more sustainable bond. It's not just because you guys are in the room. It's more sustainable given this market than the overall index. That's just a fact. And so if you look at the total sits right now at basically an index of 94. If we're matching to the end of Q2 of this last year. So think about it. We're at a $4.2 trillion market, and we're 6% down, on the overall. Now, obviously, inventory crises, you guys know a lot more about that than we do. Affordability crises, all that can happen, but it's important to understand and credit you guys that your guys' volume is not consistent with the overall market. It's a much more sustainable, frankly, a sustainable model, in the environment that we're potentially going to, notwithstanding, of course, the current geopolitical situation. So I'm going to skip. I'm going to just go through this slide real quick. And for everyone who has seen my webinars knows that I could never have made this slide. So definitely not mine. But just wanted to talk about, we'll talk about digitization. Curtis talked about TAM. He talked about BAM Marketplace, and also talked about the GSEs. And, Amy Creason and Steve Pulowski, if you're in the room, want to thank you guys for the leadership there on bringing that transparency, and we'll talk a little bit more about that, but I'm going to run out of time pretty quickly here. So I'm going to skip over just to basically what we're looking to do on the innovation side. Let's start with the easy one. Phone-based TBA trading for most of you guys already has disappeared. It's just a fact. It's a superior way of doing business. You have two hands. You can call two phones, two dealers tops, versus an electronic exchange, an electronic platform. We talk about, what makes something a commodity. And again, the broker dealers are not a commodity because they're extending credit to you. But as far as the security that's traded, there's really only three things that define that price, which makes it very, very generic. And that's the whole reason that, as you guys all know, that the mortgage-backed security was put into existence, was because of its genericism there. So that's definitely an easy one that's well on its way. Andrew will talk about timing on that. Digital marketplaces, again, Justin's going to talk a lot about that on the BAM marketplace side, but I do want to just talk for a second about security spread commitment. For those of you that don't know what that is, it's just that was really the quantum leap that we needed to have you guys see an execution that really is not achievable to you if you're not approved by that buyer. But with the security spread commitment, you can basically lock in that value. Everyone's held in their relative positions. You as the lender, as the seller, you keep your hedge on because the commitment exposure has not transferred. The buyer on the other side has not put on a hedge because the exposure is not there yet. Once that approval is actually affected, then you can convert from a security spread commitment to a price commitment. And so everybody's held in their relative position. So you take a day like yesterday, market lost a point, right? So your loan pricing came down a point, but you are all hedged, obviously 100% on your funded loans. So you're protected on the hedge, but basically that spread was held as it came down. And so if you were approved today, you would be able to execute on that loan sale. And again, just because I don't want to steal time from these guys, I just want to talk for a second. Justin will hit on CRA marketplace. With the MSR side, we're going to put this squarely on Azad's shoulders and Bill Sheriff's shoulders. They'll talk about it a little bit later today. But look, we have all gotten, for those of you that sell servicing, we've all gotten the same email over the years for the last 20 years. It's been exactly the same as far as brokering. So, X MSR brokerage is the exclusive representative of this portfolio. We'd like bids back in 2 weeks. That email is exactly the same when MCT started as it is now. And that really does need to change. There's been talk about digitization, there's been no transformation there at all. So we are going to basically create, and I've been asked by a lot of you in the audience, hey, why don't we have a BAM for servicing? That's what we're going to be looking at. Obviously, there is a lot of work with regards to all the contracts. We're not saying we're going to solve all those problems immediately, but that's going to be a big initiative of 2022. And again, Bill and Azad will talk about that. And again, full price transparency to the front end. It all started with the transparency, the cash window. We really do believe that the technology is there to allow us to help you guys drive those pay-ups, those spec pay-ups, those CRA pay-ups that currently exist just as windfall profits, right? On the back end, to be able to drive those for more efficient pricing down to the front end, down to the borrower. And so we're going to be continuing to push that. We're currently in working through with 4 or 5 large aggregators with front-end APIs. We're converting some of the GSE APIs to be able to push more to the front end on best efforts pricing. But that's going to be a big push for us. again, not to be melodramatic, but we are all here in capital markets to lower rates to the borrower, right? And really the only way you do that is pushing things like CRA, like specified pay-ups, those pay-ups that exist because the poor borrower is locked in this loan. We need to be able to push those so that you guys can price more efficiently to the front end. So we're going to be working heavily on that. So I am way over time, so we are going to, these are the technologies, that we have. I think Curtis covered them, and I'm actually going to skip right to Justin here with BAM Marketplace.
All right, Phil. And just a quick reminder that we will be distributing all of these slides because I couldn't keep up with taking all those notes, but they'll all be sent out. Justin Grant.
Thanks, Chris. Tough act to follow, Chris and Curtis and Phil, but I will do my best here. How many BAM Marketplace participants do we have in the room? Can we see a show of hands? I know we've got a good amount. Sellers, perfect. How about buyers? I know we got some of our buyers in here. Matt from OnQ, Tom Kirby from VIP. I know he's in the room. Angel Oak. Special shout out to those guys and all of you for being early adopters. What we're really trying to do with BAM Marketplace, Curtis and Phil mentioned it. Our vision is a truly open loan exchange, and that's what we brought to the market with BAM Marketplace. And in order to do that, we've got to have automated live bids. We need real-time bids. Almost instantaneous or on-demand bids from our buyers to be able to facilitate all of the bids that they're going to have to do with all of you guys out there submitting bids. So we've got tools that we've provided our buyers that allow them to efficiently and quickly generate those bid prices to submit in a very speedy manner. We do that leveraging our agency APIs that we're connected to. We've got extremely granular margining and restrictioning capabilities, that really allow buyers to price what they want on any given type of loan. And that's extremely powerful. It's 2013, I think, is when we saw really bidding start to take off. And you think about all the competition that's come into the market, and with the advancement of the bid tape and just all the data points that we have made available, right? That granularity is key, and goes right into those things that Phil was talking about there with CRA and the spec pay-ups. So providing our buyers those tools to be able to properly price their loans and get that to you guys in a very quick manner is extremely key. Oops, sorry, I'm going to get forward my slide there. Bidding regardless of approval status. So this is really the key of BAM Marketplace, right? Now we're opening up your best execution to not just your approved investor set, right, which is limited. Many of you guys, we see, I think our average MCT client is approved with 16 or 17 investors. At MCT, we see over 50 investors transacting with our clients in a given month. So if you think about it, if you're a seller, that's a lot of potential outlets you may be missing out on. And so we're bringing that visibility, that transparency to you by providing these buyers with an opportunity to bid on your loan sales. And that's, if you remember some of our webinars when we first brought BAM Marketplace back in 2020 during COVID, really the genesis was to provide liquidity to our clients, especially those who didn't have a direct agency approval, right? We know that in times of crisis, market disruptions, right, you're gonna have price dislocation. So the way to combat that is to make sure you're seeing every single price out there. And that's our goal with BAM Marketplace, is to provide you as a seller complete transparency into all the executions that are out there, so you can limit your risk, especially in volatile markets where we can especially see some disruptions. Again, pricing every loan to every investor. That dovetails too into the transparency piece, right? You as a seller, you want to make sure you're achieving true best X. Part of that, we mentioned the bid AOT as well. If you've been an MCT client for a while, you know that we harp on bid AOT for good reason. It really combines the best of both worlds with the granular bulk bid, but also some of the efficiencies, cash flow efficiencies of an assignment of trade, as well as the trade savings by assigning that trade over. It's a complicated process, though. There's some math where you're incorporating the gain and loss on your trade into the price alone. And shout out, there's been a lot of investors who have built this into their process and allowed our clients to take advantage, but there's still a lot of buyers out there who don't offer assignment of trade, and partly it's just a cumbersome process. And so what we've done with our tools in BAM Marketplace is we've brought those in so that any buyer that wants to come in and offer this execution, we've completely automated it. We do all the hard work. You guys that are leveraging the assignments right now, you know that the tri-party is completely automated. And Andrew would talk about this a little bit with Agile and TAM, but that's also one of the key missing pieces to this completely automated assignment process. One of the reasons that buyers are hesitant getting in there is you've got this back office work of validating the trade details and getting the tri-party completed and talking with the broker-dealer. Now that we have many of those broker-dealers on our TAM platform, we have all three parties, with the seller, the buyer, and now the broker-dealer, all on one platform, which is great because we have one system of record. Everybody can confirm the tri-party in one spot, and so it's the final missing piece of the complete automation of that bid AOT. And so that's something you're going to see us push a lot more this year now that we have that functionality offered to our BAM Marketplace buyers. We talk about the transparency and having visibility into the investor community out there, many of whom you aren't approved with. BAM Marketplace, we're helping to streamline those approvals. So right now we can facilitate the MLPA and the application for any interested parties that have seen pricing and want to transact, and maybe through that security spread commitment that Phil talked about, and I'll talk about a little more here as well. But really, that's just the start. Really, where we see this going. What we're going to be working hard on is we want to have one standardized contract for our buyers and sellers, right? If our goal, right, if you want to be maximizing your profitability, means getting signed up with more investors, right? There's a lot of headache, and I know with some of you, especially at depositories, there's a lot of red tape getting those applications, pushed across and filled out, and so we're trying to break down that barrier. So we'll keep an eye out for that, because we're going to have one standardized contract with our buyers and sellers. We'll make it a lot easier for you folks, right? You just have to fill it out one time, and now you'll be able to transact more quickly with our buyers. We're also going to have things like automated research as well, right? We know a lot of folks in the room, right? Every year that comes up, and you may be rethinking, I've only sold a couple loans to this investor. I don't know if it's worth it. Again, usually those are pretty simple. We're going to automate that process and reduce that friction, so you don't even have to worry about that. you know, as you're looking to add more of these buyers to your arsenal. Go on. There we go. So Phil talked about the security spread commitment. You know, really that's what makes this transaction or this exchange possible, right? I know a lot of you, maybe some of you who haven't opted in, thinking, how can you even transact with somebody who I'm not even approved with yet? And really it's through the security spread commitment. And so what you're doing is you're locking in, you know, a floating price. You're going to keep hedging your loan, but it's a spread to the underlying security. So you're essentially getting the investor to agree to hold their margin that they had priced in on a loan or loans that you're trying to commit any given day. So it allows you to, you know, open or start that relationship with a new investor, you know, and transact, you know, secure that price on the loans, and then you know you'll do the application, and then once you're finally approved with you know, with a new investor, you're going and finalize that commitment. So it really is the you know, the heart, or I think the crux, I think what Phil was trying to say with BAM Marketplace. And the nice thing, it's going to be used too. We see this facilitating all kinds of other transactions. Phil mentioned CRA and CRA Marketplace. We're extending this marketplace to give visibility there, so that buyers can peer into their clients' open pipelines and see what may be available. Right now, this is another kind of groundbreaking change in the process where we're only transacting with closed loans, right? But all of you have your, you know, the majority of your pipeline still being hedged, right? And this opens us up, you know, talking with the agencies and others. We all know some of the other legislation that's been passed with CRA, providing that that facility through CRA Marketplace to allow you know, buyers to find loans that you may be unaware that you have, that you're in their footprint, right? And now you can achieve a pay-up because some depository you know, needs loans in your footprint. So we're helping to play that matchmaker role as well with things like CRA. But again, this can be used for any types of loans that are needed in the open pipeline, right? Phil uses the term spec completion or pool completion, right? If you're an investor and they're selling to the agencies via MBS, not the cash window, there's pool minimum requirements. And a lot of times, you know, they need to hit minimums of $1 million. And if they're short a loan or two, right, how nice would it be to be able to go in and quickly just view and see what's available and make an offer, even if the loan's not funded yet. So keep an eye out for that, because we're going to be, you know, leveraging the security spread commitment with things like CRA and the open pipeline as well. Last slide, just wanted to give an update. I know we'll show this from time to time, but just you can see, you know, kind of average pickup in 2021 for our sellers, you know, committing loans to BAM Marketplace investors, an average of just shy of a quarter on the pickup on those loans and what they would have achieved. And you can see there's some pretty nice pickups on the spec products, especially as you go lower in loan amount, things like lower FICOs. So again, providing that liquidity and transparency to you know, certain types of loans. Again, you know, lower FICOs is a great example when COVID first hit, where we saw that liquidity evaporate from a lot of the buyers out there. So just, you know, give you guys an idea of what that looks like. Again, this will be expanded to other areas like CRA as well, not just, you know, lower loan amounts and lower FICOs. You know, BAM Marketplace, really any loan that a buyer wants, matching them up with a seller that's originating those loans, that's our goal. We want any buyer, it could be a buyer that's just focused on manufactured homes in Florida. We want them in our exchange. We want you as a seller to know that we're sourcing those buyers so that we're finding, providing you with true liquidity, and you're always going to find, every outlet on our platform. So, thanks.
Hey, just a quick reminder as we bring up Andrew Rhodes that in the app, there is an opportunity for you to ask questions. And we may, we wanted to have a Q&A session. It doesn't look like we're going to have the time to do that. But please post your questions in the app, and any one of the MCT members will answer it or reach out to you guys directly. Thanks. Andrew Rhodes.
Yeah, thank you, Chris. And yeah, definitely a tough act to follow there with Justin. I think BAM Marketplace is going to be crucial for a lot of the lenders and achieving the maximum pickup. So we're really excited about it. So just to kind of continue on the theme of Curtis and Phil taking a trip down memory lane, I was hired back in 2005 to be the best tech specialist. So that was kind of short-lived into the crisis, and then I moved over to trading in 2007. So back in 2007, prior to us having Agile or TAM, the trade auction manager, we were always picking up the phone, doing our TBA trades over the phone. So the thing about doing the TBA trades over the phone, it works. It's just not as efficient as kind of what we have right now with the electronification of the TBA trading. But pick up the phone, call a dealer, get a price, call another dealer, get another price, see who has a better price. You're really trying to achieve that best X when you're doing these TBA trades, because you're looking for the best price. You're looking for, to make sure the client is getting the best price, achieving the best pickup. So that process, you get the best price, you write it down in your trade book. I probably have, going back to 2007, I probably have 15 different trade books that I could, go through. But then after you write it in your trade book, then you'll go ahead and you'll put it in the model. So it's a time-intensive process. So it's just not as streamlined as it could be. So we were always looking for ways to kind of improve the trade process, right? So outside of writing down the trades in your book, putting it in the model, we had somebody doing trade reconciliations. So the trade reconciliation process was pretty much the same thing. So somebody's full-time job was to take the book from the trader, put it into a blotter, take that and put it, double check that against the model. So it was really a time-intensive process. So the thing that was really, struck us as the difficult thing about that, and why we wanted to kind of make it more efficient, was we always ran into errors, right? There's always errors. I'm sure some of you guys can relate, on 48-hour notification, 10 Pacific, trying to validate a position that you're not sure of. It was stressful, right? Definitely contributed to a lot of my gray hair. But it's something that we just really found that it was, there had to be a better way to do it. And that's essentially why we created TAM and the Trade Auction Manager. So I think, as Kurt's mentioned, currently MCT is the only hedge provider in the space that's leveraging the Agile technology. So I think that, as we kind of move into the future, we're going to see more of the electronification of TBA trades and kind of the phone system completely going away. So let's talk about some of the issues with the phone trade process outside of what I just described in my day-to-day process back in 2007 and on. So like I said, like Phil said, you pick up 2 phones, call 2 dealers, get 2 prices, right? So it's really limited in the fact that you're not able to call all of your broker dealers, you're not able to get all of the pricing, you're not able to achieve potentially the best X. We've had instances, on the platform where, I'll talk about this in a minute, but we've seen spreads of 2 ticks between, 7 different dealers. So if you're only calling 1 or 2 dealers, you're potentially missing out on a lot of pickup, right, and a lot of execution. And then I would also say, the slow and inefficient process on the phone, it was, if you're calling 1 dealer, it's not that bad. You're just calling the dealer, get a price, take it down. But like I said, you're potentially leaving 2 ticks on the table for your trades. So that's just a part of the phone process that we just really feel is kind of lagging, and there's a more efficient way to do things, and that's essentially what we're trying to achieve here. And then as we talked about with the trade errors happening, it really does cause a big issue, especially for investors for the AOT process. If there are errors, trying to troubleshoot that with the dealers, with the investor, making sure we're getting the best price, or making sure we're getting the right data over to those investors for assignment of trade. It was just, it was stressful at times. So I think, with all those all those caveats on the phone trading system, I think that's kind of why we're seeing the phone kind of trades. We're going to see that go away here in the next couple of years. So whether that's 2 years or 3 years, I think it's going to happen pretty soon, especially for MCT clients. I know a lot of the clients already utilize the Trade Auction Manager, and I know all of our traders are utilizing that, and it really is a huge pickup for the traders at MCT, because we're able to manage multiple clients and kind of do a lot more trading and a lot more efficient trading through the TAM platform. So as I was mentioning, some of the benefits for the lenders is that better execution. And like I said, it's more efficient in the sense that, if I'm sitting there at, 1:30, half an hour prior to market close, and I have to do, coverage for 5 different clients, I could go into the MCT Live platform, look at the coverage real quick, see, okay, I need to do 2 million for this guy, 5 million for this guy, 3 million for that guy, and I could go in the system and I could pretty much do that. If I was doing that over the phone, it would probably take me the full half hour just to achieve that. So, definitely a huge pickup in terms of efficiency. And then another thing that I think that is really great about the platform is, we're calling it the democratization of Tba trading. And really, it's just opening up the access to regional dealers for electronic trading. I think having that ability for all of our lenders is a huge pickup for all the reasons I've already mentioned. One thing that Justin touched on is I continue to harp on is the data integrity. I think having Agile be the database of record for all the trades, it makes the trade reconciliation process simple. If we ever have an issue with the dealer, we just go into the database, we pull that trade, and we provide that info to the dealer and say, hey, here's what we see on this trade, and here, then we'll just go through that process. So it's a pretty streamlined process, and then having that data integrity, like I touched on with the AOT functionality, is crucial, right? It's a necessity. It makes investors feel better that they're looking at the same database of record that the dealers are looking at, that the clients are looking at. So it really is a big pickup there. And another thing is the browser-based software platform that it is allows for trading in any area, right? As long as you have an internet connection, you can pick up your phone. Do a TBA trade, check your coverage, do a TBA trade. We do have the capacity to restrict that for certain banks that don't want to have that open up to everywhere. So we have the capacity to restrict that if needed. So kind of moving on to some of the benefits for the broker dealers. As MCT continues to grow, their market share is going to continue to grow. Right. I think a lot of our traders are utilizing the Agile dealers, and we're continuing to see that market share grow. Talking here about the increased volume of the trade requests, that's one of the benefits that all these dealers are now being able to see. So instead of the phone process, picking up 2 phones, talking to 2 dealers, if you have 8 dealers, you're most likely not calling all 8 dealers. So it really does kind of open it up, and it provides them more access to and more opportunity to win on volume if they want to increase their overall volume. We were talking about with, I think Curtis touched on this, with Agile being an RFQ platform, it really is a streamlined and efficient way to do the TBA trades. And MCT, like I said, is the only one currently leveraging that technology. And we definitely see growth and, talking about, I think it was MBS pool bidding that Curtis touched on, the optimization. These are all, plans in the near future that they're going to be rolling out. So we're really excited to see that piece of it grow as well. And then I guess the last piece here would be on the dealer reporting. So we're providing them reporting on a high level on exactly what they're doing on the platform, and then we're currently in development on kind of some peer reporting for the dealers, as well as some performance metrics. So that's going to come here in the next little bit. So we're really excited about that, and we're always striving to make the platform better. So any feedback that we're getting from the dealers, we're kind of taking that and we're putting that back into the system. And I just wanted to thank all the dealers. They've been great to work with, and we're definitely, like I said earlier, continuing to see their market share grow, and we're excited to see the benefits and the new functionality rollouts and getting feedback on all that with the dealers as well. So I guess if you guys have any questions on TBA trading or the Agile platform, come find me over the next couple days, and I'll be happy to answer any of your questions.
Great job, Andrew. So just a point of clarification there. So all of those efficiencies that we're bringing to our trading staff and to our autonomous users, they're great to make your job and you more efficient at your job. And what we hope is that extra time that our MCT trading staff is given by leveraging this technology allows them to work more closely with you and understand all of your needs as clients. Paul Yarbrough.
Thanks, Chris. I'll start out by saying, Andrew, if you don't want your gray hair, I'll take it. Hopefully you have enough for Bill Sheriffs, too. Well, continuing with the theme of tough act to follow there, thanks, Andrew. It'll bounce back here with content after I'm finished, but not as much exciting technology to present. But what I'm here to talk about is to follow up on Curtis's point of delivering not only the best tech in the industry, but also an unwavering, dedicated commitment to provide the best service too. My group, the Client Success Group, we're here to support you at any stage in your growth cycle. From all the way down to just best efforts, moving to mandatory, to that kind of semi-autonomous. Maybe you're doing your own hedging, maybe you're doing your own loan sales, all the way up to just an autonomous user. We're here to support you. And the way we're going to do that is we're rolling out our new role, which is the Capital Markets Technology Advisor. That Capital Markets Technology Advisor is going to be supported by a team of CSG analysts, as well as the best-in-class trade desk that we get to stand on the shoulders of for our support on everything that they do for you. But even as an autonomous user, we still lean on that trade group and our lock desk group to just give us great feedback on what's going on in the marketplace and what's going on just on the everyday loan sales, trading, hedging in general. So, there may be some confusion at sometimes, who do I call for this problem or that problem? The bottom line is at MCT, we're all here to kind of support you, right? Chris Anderson leads that charge with this this very, I would say Neiman Marcus, but maybe they're not as good as they once were. But that top of class customer service, really just dedicating quickly, getting to your problems as quick as possible, finding resolutions, and answering any questions. Maybe there's not a problem, you're just confused on something. We need to solve that for you. That capital markets technology advisor is going to be based on your trade desk team, so there's some continuity, right? We've approached this as a jump ball, kind of solving for solutions, but now we're going to provide you some continuity so you can build that trust and that relationship with your technology advisor. For those of you that have been trading with us for a long time, you have a trade desk and a trader that supported you, and you can always call them. I was a client once, had Andre as my trader, and it was always great. I could talk to him every day, whether he liked it or not. And now we have that same support group with the Capital Markets Technology Advisor. We're going to start calling them CMTAs because it's a mouthful. The Client Success Group, I'm really proud to say that we have over 100 years of experience in our Client Success Group. That goes from lenders like myself, Cody Eccles, Kristen McCarthy, Manny Reyes, we all worked at lenders. But we've also got our own internal staff that we've brought up through the lock test, right? Like Alyssa, like Sam Farmer, and Zach Ellis, who will be the CSG support group. So a lot of experience that ranges from, like I said, lock test, compliance, education, trading, buying, post-closing, originations, everything. So we're there to support you and try to help you find or at least direct you in the right direction to get you where you need to be. And the last thing I have to say is that, and that's just this next slide, just kind of showing you our staff here. But one of my favorite parts of working with MCT is not only the people and the clients, but also working with Phil and the team here to roll out new innovations. And one of the latest innovations is our chat functionality. Over the last year, with really going into the pandemic, our developers internalized a chat functionality that's embedded into MCT Live. And we've been using that internally to communicate with each other from anything like, what music are you listening to today? But more importantly, are you seeing this? What are you seeing from investors? This bid is a bit delayed. This investor may be repricing. Whatever it is, we've been communicating on that. But now we're going to look forward to moving that out to you as users as well, so you can communicate directly with your CMTA, your trader, right there in the platform. Our goal and our big vision of that is that it's a community for all your partners. Hopefully we can get investors, broker-dealers communicating in there as well. So you don't have to leave the platform. It's the platform where loans are managed and traded, and so it should be the platform where you can develop that camaraderie with your partners in the industry as well. So please find me and any of the Client Success Group people. Any questions we have, we'll try to get you the answers, and we'll get right back to our desk so we can figure them out for you. So, all right, thanks very much, guys.